So I said I was gonna do the 30-day challenge to get down to 190 pounds and to 5,000 subscribers. I kind of realized that goal was a little aggressive on both parts, so it's gonna start right now. I can't really lose weight on vacation. That was a little ambitious. Starts now. 30 days, July 6th to August 6th, 5,000 subscribers and 190 pounds. I'm gonna do P90X, video 1, workout 1 now. Workout done, 15 minutes to get showered and in the car. Alpine just called the cars here. Yep, they sure are. 3:31, not bad. How you doing? How are you? Good, thanks. $451. Wasn't worried at all. Solomon was moving. Here we are at the NASDAQ. I do miss the old NASDAQ fast money setup, but this one's much more sleek upstairs. Right here. Look at everything going on in Times Square. So much fun. Hey guys, Tucker.
Hi, you two.
He's keeping an eye on me. Right over here.
Did, but they didn't remove the old one.
Buddy Brian Kelly. I love BK. In this shot. See? This is before with bags and zits.
To go back, you do that.
Okay. I screwed this up last time.
And then all you have to do, if you're writing, we don't need the smart board lights yet. You just use the pen. I actually have to use this for something else. Right. The white box. But I saw it today.
Bouncing back after starting the day in the red, the S&P closed higher by 0.5%, or Dow gained nearly 8%. Healthcare because it's discretionary with today's you want to call it, we're always running transport, a warning sign for stocks. Let's go off and talk to Todd Gordon from tradinganalysis.com. Todd, what are you watching?
Sure, Mel. Yeah, the death cross is in progress right now, and you can see that it happened back in 2015, and it led to a significant downtrend. The question right now is, will this continue? We move to the next chart, and I'll show you a very interesting divergence to kind of drive this point home. In orange is that transportation index. You can see it's come off quite sharply from the 2015 high. Notice the S&P, which we've overlaid in blue, has made a new high relative to late 2015, where the transports have not made a new high. So is that a sell signal? Dom actually just did a nice little piece, and he kind of stole my thunder. Dom hit the nail on the head. It's all because of airlines. You can see the Amex airline index and the transports are virtually indistinguishable. It's the exact same correlation, upwards of about 93%. The reason is crude oil has come back, sinking the airlines. Crude oil rallying back, I think, is a broader positive signal for the market. So for me, this transport divergence, this death cross, doesn't say sell stocks.
Does not say to sell stocks.
Yeah, because crude oil is coming back. I mean, that's the reason I believe stocks have stabilized. Crude oil rallying is hurting the airlines, which, as Dom said, is really hurting those transports. So I say ignore it.
All right, Todd, thank you. Todd Gordon, tradinganalysis.com. Who takes the death cross at the transports as a leading indicator? Dow theory?
Well, I mean, there's something to it, but I think what was interesting, what Todd pointed out, is the divergence between, let's say, SPY and IYT. And it comes back to what we were talking to Todd show. It's all about yield. SPY, yield, 2%.
Yeah, I run that. My own research business. So I thought that went well. Kind of fun. easy. The smart board didn't blow up, which happened last time, which is great. So that was kind of fun. We'll see if the crude oil market does stabilize. And now to find my car. It's my driver sleeping. Yes, it is. Sleeping?
Just, you know.
Sorry, brother. You want me to drive? Nobody's home. They're probably swimming at Trisha's parents'. Time to go down and do the research video.
So that Fast Money interview was on July 6th. It's now July 8th on Friday after non-farm payroll, and some pretty interesting market developments that we talked about in that Fast Money clip are actually playing out here. So the S&P just above me here, up 1.5%. I mean, really nice move to following a strong jobs report. That's great. Markets are acting pretty strong in here. Bonds are holding their bid, which tells me even with strong jobs, the Fed's still not going to raise rates. That's fine. But what's interesting and what ties back to that Fast Money piece was crude oil is at $45.20, just above me here, only up 0.1%. So crude oil is not rallying. So what that's allowing the transports to do is to catch up. Look at the percent change of the major ETFs that they take a look at. The biggest one on the upside are gold miners and mining and stuff like that. But look right behind the top four, which are gold mining, is right here, the transport ETF, up 3.18%. So again, what's happening is stocks are rallying back while crude oil just goes kind of sideways, which allows those transports and specifically the airlines to come back. XTN looks pretty good here. We have a nice little three-wave retracement here that has found support. So we have an A, B, and then C, and you'll notice the 100%, which is an A equals C, which is a textbook technical pullback, has held at 41.05, and it looks like we want to try to push higher. So we have trendline resistance coming in right at about 45.5 bucks. So while this dynamic continues, we could continue to see transports move on the top side. The other one that I want to take a look at, and this is a position we have on right now with our research customers, is silver. Silver is breaking out. It's acting very well with the dollar that is really pretty sideways to down, with the Fed surprisingly still on hold here going into the election year. So it's allowing precious metals to rally. So we have SLV, which is your ETF that tracks silver, staying above these two lines. These are the major power levels. It's a proprietary indicator I'm working on here. This is the minor one. This is the major one. Basically $18 is support because you have both of them right below you. So how far could SLV go? We have top side. Let me just do a little blue dot to blue dot, major swing to major swing. We are right now at the 1272 extension, which is at $19.27. A natural upside target is going to be $20.44 at that 161% Elliott/Fib projection. I have a position on right now with clients. We have the 1918 put spread. August 5s expire August 5th, 28 days to go. Part of the reason we put a put spread on is look at the implied volatility back here in the chart. Focus on the purple level right here. Purple line right now, implied volatility is about 33%. If we look at the range, 33% over the last 52 weeks is in the 64th percentile, which is volatility is quite spicy here in the silver market. So that's why we did the put spread instead of a call spread. And if you're watching on the YouTube window, be sure to hit the like button or subscribe. We're trying to make that big push towards 5,000, so we give the 10 free Fibonacci courses away, drawing to be August 6th. And as the last video show, I need to lose another 10 pounds. Also, be sure to look at the prior YouTube videos. I've got all of the vlogs up from St. Bart's. Had a lot of fun in there, screwing around. Hopefully, you know, a little off-topic stuff if you guys are bored over the weekend to have a look. All right, guys? Thanks again.
If you guys think I do good YouTube videos, click the like button, right? Subscribe. Subscribe. Say that again. Subscribe to this channel.
Subscribe has.
One more time.
Subscribe has.
And hit the like button.